moves have you made to capitalize on them? Investment advisor Brian Myro has some ideas to help you manage your retirement savings while interest rates are still elevated. And he's joining us now. But Brian, before we get to the interview, some of our viewers may not know that you actually live in Ruidoso and have had to deal with the wildfires. I know you're joining us live, but can you give us an update of how you and your family are doing?
Well, we're all doing pretty good, Nicole. It's been a pretty hectic last 10 days, but God's blessed us all in many different ways. And our home is fine, and our staff, just about everybody is getting back into town. Just about our whole team was evacuated last week, and we had our staff all over the state, and El Paso and Albuquerque and southern New Mexico, wherever they could find a roof over their head. But the main thing is everybody's safe and everybody's doing good, and our overall continuation plan in our firm worked really well. We didn't skip a beat last week, even though we were scattered everywhere. And so there's many positives that happened last week, even though a lot of people evacuated. We lost over 1,500 structures in Ruidoso last week, and there's been a few deaths, and they've reported another one this week that we've heard. So it's been a real tough situation. But overall, we're in the recovery mode now, and everything's looking good.
Well, I'm glad you are doing okay, my friend, and the crew as well. So what's happening with interest rates as we're midway through the year?
Well, Nicole, it looks like interest rates, they're going to continue to stay high throughout 2024. The Federal Reserve, they held interest rates at a 23-year high, and it will likely reduce the number of rate cuts that it's going to make this year. But rates should remain above the inflation rate, for at least this next year.
So what are some of the strategies to consider while interest rates are still higher?
Well, Nicole, here's a few things you want to consider. You want to pay down your high interest debt and prioritize paying off your high interest debts, such as credit card balances and personal loans, to reduce your overall cost of borrowing. From an investor standpoint, you want to take advantage of these higher interest rates by placing funds in high yield savings accounts or short-term certificates of deposits, CDs. We're seeing these in the 5% range at this time. Fixed annuities are also another good option. With these, you can lock in your higher interest rates for a longer period of time, and we're seeing these close to the 6% range now. And if possible, postpone making any large purchases that would require financing, such as homes or cars, or at least until interest rates become a little more favorable.
Well, entering the second half of the year, especially with an upcoming election, can bring uncertainty to financial markets and personal finances. So what other financial tips can you share?
Well, you want to diversify your investments. You want to ensure that your portfolio is well diversified across different asset classes, such as stocks, bonds, real estate, annuities, commodities, and you want to do this to mitigate your risk. You also want to continue to focus on your long-term goals. Stick to your long-term financial plan rather than reacting to political events or market volatility. And you always evaluate your emergency fund. You want to make sure that you have at least 3 to 6 months worth of living expenses saved in an easily accessible account to cover unexpected costs when you have that rainy day, kind of like when we just had this fire. All of a sudden, everybody's out of town. And you want to make sure that your investments are balanced and they line up with your risk tolerance. And if you do not have a risk assessment, or if you have not done one, you need to be sure and do that. And most of all, do not get emotional when it comes to investing. Historically, markets perform well in election years. And, dating back from 1928 all the way to 2016, the S&P 500 averaged over 10%.
Well, Brian, anything else to help our viewers prepare for higher interest rates and ensuring they're being financially savvy?
Well, making sure to be as tax efficient as possible is a big one. You want to maximize any tax advantaged accounts that you have, and if possible, contribute the maximum amount to your 401ks, your IRAs, or other retirement accounts. You want to consider contributing to a Roth IRA or a Roth 401k. Although contributions are made with after-tax dollars, withdrawals in retirement are tax-free, which can be huge if you expect higher tax rates in the future. And you also want to look at a Roth conversion strategy that could also have a huge impact on your tax situation in your retirement years. And there's many other tax strategies out there. You should visit with your financial advisor or your tax professional to see if there's other ways that you can be tax efficient and have forward thinking tax planning.
Brian, anything else that you'd like to leave us with today?
Well, Nicole, you got to have a game plan for your finances and your investments. Whether you're saving for a future retirement, or if you're retiring soon, or even if you've been retired for years, it's always good to run an analysis and make sure that your finances are on track. Today we're offering a free in-depth retirement analysis for our viewers. And in a retirement analysis, we answer that question of, do we have enough? Do you have enough to retire or continue in the retirement of your dreams? And also we're offering a free complimentary copy of my book titled Smart Money for the Backside of Life for anybody wanting to set a visit. And in my book, Nicole, I talk about many different aspects of financial retirement and planning that folks deal with on a regular basis.
All right, text RETIRE to 915-233-2904 for your free retirement analysis, Smart Money for the Backside of Life. You can also visit their website online at www.myrocapital.com. Thanks, Brian, as always.
Nicole, thanks for having me today.